Hi, I'm Todd Russell, and I'm a certified financial planner professional in Nashville, Tennessee. I created this site and these videos to teach and inform about long-term care insurance product solutions, how they work, the different plans, and to inform you as a consumer what is available in the marketplace so you can make an informed decision. This is an introductory video about what is long-term care insurance and what does it do. You can find more videos and information on my website at www.myltciplan.com. Long-term care insurance is simple at its core. It's a type of insurance that pays someone to care for you when you can't care for yourself. It's custodial care which pays for someone to care for you. So this is not health insurance. It's not coverage for doctor visits or surgeries or prescriptions. It's insurance to help with the day-to-day events like bathing, dressing, eating, or moving around. So if there comes a point in your life where you're physically incapable of caring for yourself, or you have a severe cognitive decline, long-term care insurance steps in to provide funds to help pay costs associated with people providing care on your behalf. I'd like to share two thoughts on how to frame long-term care insurance in your mind's eye. One is transfer of risk, and two is financial leverage. So first, transfer of risk. Rather than self-insuring and being your own insurance company, you're effectively offloading that risk from your personal balance sheet to an insurance carrier in exchange for a single premium or a series of premiums. Next, think of long-term care insurance as financial leverage on your dollars that you allocate to the policy. So if you put $1 in today, it could provide you 6, 8, 10, or more dollars of long-term care benefit in the future. One of the first questions someone should generally ask when you are interested in long-term care policies, or if you have one, is how do you access benefits from the long-term care policy? So I'm going to give you an overview of how most policies work. So first is a certification. So that means a licensed healthcare professional, typically a doctor, a nurse practitioner, or a licensed social worker, will certify you as being chronically ill either physically or cognitively. And this means you're unable to perform without substantial supervision at least 2 of 6 activities of daily living. And those 6 activities of daily living are bathing, dressing, eating, toileting, transferring, or maintaining continence. Or if you've been diagnosed with a severe cognitive impairment like Alzheimer's or dementia that requires supervision. So step 1 is being certified as chronically ill. Step 2 is when the certification is made, the insurance company requires a written plan of care. And this is effectively a roadmap from your healthcare professional that outlines what type of help you need, who they're recommending to provide the care, and where it is being delivered. Number 3 is there's also what's called an elimination period on most policies. And this is a waiting period before benefits are paid from the policy, and it's commonly 90 days. One point of difference, though, is to make sure that you understand how the carriers calculate days. Some policies count calendar days, others count service days, or in other words, the days that you actually receive care. And this is a small detail that can have a big financial impact, so it's important to understand this definition of a policy that you may be considering or that you may already have in place. 4 is most policies pay for care in multiple settings, either at home or in an assisted living facility or in a nursing home. But the care provider generally has to meet certain licensing requirements depending on your type of policy, especially if it's a reimbursement type plan. And I'll cover the differences between indemnity and reimbursement in the next slide. But this is a major difference between policy types, and it's worth really understanding. And then last, once your claim is submitted, the insurance company reviews the paperwork, your certification, your plan of care, and the provider information. When it's approved and the elimination period is satisfied, that's when benefits start paying, generally on a monthly basis. I mentioned in the previous slide about reimbursement and indemnity benefit payments. So these are the main 2 ways that companies pay out benefits. And it's important to understand the difference between these 2 terms because they are very different. So first, reimbursement is just what it sounds like. It's the more traditional style, and most older policies pay benefits this way. And so when you receive care, you submit invoices or statements from your licensed provider, and the insurance company will reimburse you for the eligible expenses up to whatever your monthly benefit limit is. It's kind of a pay-as-you-go structure, and you only get reimbursed for what you actually spend on qualified long-term care expenses, and the care generally needs to come from licensed professionals or approved facilities. So these styles generally specifically exclude family members being compensated for being a caregiver. So this works fine for people who are using formal care, like home health aides from an agency, or if they're in an assisted living facility or in a nursing home. But this generally comes with a little more oversight, monthly documentation, and it's generally specifically going to exclude family members having the ability to become caregivers. So the second style of long-term care payment is indemnity benefits. And some of your more modern policies include this as a feature on them. And so basically, once your claim is approved and care is being received, even if you're receiving care informally through an unlicensed caregiver, maybe a neighbor or a family member, you receive the full monthly benefit no matter what you actually spend on the care. So you could pay a professional caregiver or a family member, or you could even use the money for other care-related expenses, like if you needed to modify your home, hire somebody for transportation, or even paying for groceries. So it's your money to manage how it's used. So for people who really like simplicity and a little more control, or if you expect to rely on informal caregivers, then indemnity plans generally offer a little more freedom to pay whom you want to choose. So let's walk through an example of how a reimbursement plan and an indemnity plan may pay for care. So let's say you have a long-term care policy with a $6,000 monthly benefit. And this month you receive $4,800 worth of home health care services from a licensed agency. And if your policy is reimbursement based, the insurance company is only going to pay you back for the $4,800 you spent. The remaining $1,200 is going to stay in the benefit pool, and you can use it later so you don't lose it. But remember, you're only going to be reimbursed what you paid out of pocket for the qualified long-term care expenses. So contrast this with an indemnity-based plan. It's going to work a little differently. So take the same example. You're billed $4,800 and you have a policy that has a $6,000 a month benefit. Well, you're going to be paid the full $6,000, doesn't matter what you spent on long-term care benefits, and you can use the $4,800 to pay the home health agency, and the remaining $1,200 will be paid to you, and it's just in your bank account. So you can use it at your discretion, meals, supplies, or just save it for later on when care expenses may increase. So with indemnity, you're not going to need to submit receipts. And so both styles have their place, and if you value flexibility and fewer restrictions, indemnity policies are generally going to give you a few more options at the time of claim. So I mentioned the flexibility of the indemnity benefit, but you should also know about another feature that can often be included in the reimbursement-based plans, and it's a provision called the alternative care benefit or the alternative plan of care provision. And so this is basically the insurance company's way of saying, hey, we'll consider covering care that isn't specifically listed in your policy as long as it makes sense clinically and financially. So if there's a new type of care or service that didn't exist when the policy was initially acquired, or if there's a care arrangement that can be financially reasonable, the carrier would be willing to consider it. Some examples of this might be non-licensed caregiver support, or unique living arrangements or care innovations that are not specifically listed in the policy. But it's important to know that these are not, or it's not guaranteed that the policy will pay out under these circumstances that aren't specifically listed in the policy. The benefits under this provision are going to be discretionary by the carrier, but it does show that the carrier is willing to adapt and be practical when new options emerge or when a family wants to think outside the box. So if you're ever helping someone file a claim, or you have a reimbursement policy, or you're considering a new policy, investigate to make sure that this is included in your plan that you're considering. It could prove to be a benefit in the future. So I want to show an example of a claim that I worked on for a client, and I've helped several file claims on their long-term care plans, but this one was specifically, we filed it under the alternative plan of care. And in this case, the care being provided did not match the policy's definition of home health care, but in a cover letter, we explained the situation. We referred to the alternative care provision in the policy and showed that it would be less expensive per month to hire personal caregivers as opposed to hiring caregivers through an agency. And we submitted that to the carrier with a plan of care, and the insurance company approved it. And so I wanted to show you the letter that we received from the carrier. So this is an example of a letter that I received when we filed a claim under the alternative care provision of a long-term care policy. And you'll see here where I've redacted some names, but they've reviewed the claim under the alternative plan of care, and you'll see that they approved it and they outlined the rate they'll pay, the frequency, and the service type that they're approving this claim under. So I wanted to just share this as an example of that carriers do pay under the long-term care alternative care provisions inside your policy. So if you're looking around for plans, you want to make sure that if you have a reimbursement style, you have this provision in the policy you're considering, or if you already have one, you want to make sure that you know it's in your policy or not, because it can be a benefit to you down the road. So let's talk about some of the common concerns that people have when it comes to long-term care insurance. Main one is people will ask, what if they deny the claim or try to get out of paying? Well, that's a fear I hear a lot, and yes, sometimes claims can be denied, but in my experience, it's usually been because something in the process was not completed correctly, or there was no certification of the insured being chronically ill. So to give you an example that we just talked about in the alternative care provision, the first time that we submitted that claim, it got denied on the grounds that we were not going through a home health care agency, which was required in the policy. When we resubmitted it under the alternative care provision, I provided a detailed letter and it was approved. But in my opinion, the carrier should have done it without me having to tell them to use the alternative care provision. But this is why it's important to know the details within your policy. And look, most carriers really do want to pay legitimate claims. They just require the right documentation to be done. So I know I sound like a broken record, but that's why I encourage people to really understand the policy that they own or the one that you're considering, because you want to know how it works. You also have consumer protections as part of the policy. So if there's a dispute and they don't approve a claim, then you have the right to appeal. Most policies have a built-in appeals process, and you have to also have the backing of your state's insurance department. And then the agent or the agency you purchase the policy through can also be an advocate to help you. The next is, what if the policy has too many restrictions or fine print? And so, you're right, policies are thick and they do have guidelines. And as we've already talked about in this slide deck, some require licensed providers. So some care settings may have to meet specific criteria, but that's when you're working with the right advisor and you're reading your policy, that's when it makes all the difference. So you can consult with the agent you purchased the policy from, or if you're considering a policy, you now know what questions you need to ask them to understand the plan. There's also consulting services that you can pay a fee to who can help review your policy with you. And then the last question to ask that sometimes concern people is, what if the policy is just too hard to use? So it is true that there are hoops to jump through when a claim comes, but it's simply the insurance company, they're doing their due diligence to pay a legitimate claim. But that's why you don't go through this alone. So the agent or the agency that helped you purchase the policy should be your first line of support when it comes time to use it. You should expect advocacy and not abandonment. So I'll wrap this slide up with the best remedy for all of these concerns is very simple. If you have a policy, read it and understand it. And so if you need extra help, you can always call the carrier and speak to them, or the agent or the advisor that you purchased the policy through. So now that you understand what long-term care insurance is and how it works, the next step is making sure your policy is current, complete, and aligned with your goals. So if you already own a policy, I've created a guide to reviewing your long-term care plan. It walks you through what to look for, what questions to ask, and how to make sure your coverage still meets your needs. You can download this guide through the link in the YouTube video description, or you can visit my website at www.myltciplan.com and download a copy of it. And if you do not have a policy yet, but you're thinking about planning ahead, I've also built a guide to designing your long-term care policy. It compares the 4 major types of long-term care plans in the market and helps you think through the key design features like the monthly benefit, the inflation protection, and funding options. You'll find other videos on my site and YouTube channel that discuss these in details and the different types of plans available. You can also request a customized proposal through this guide to designing your policy. And whether you're reviewing or designing a policy, the goal is going to be the same: to put a plan in place before care is needed so you or your family isn't left scrambling when life changes. If you'd like help reviewing your policy or building a personalized proposal, we're happy to walk through it with you. No pressure, just clarity, guidance, and a plan tailored to you.